there's a mega merger happening in the marijuana market. Trulieve buying Harvest Health for more than $2 billion in an all-stock deal. It is the biggest U.S. cannabis transaction to date. Joining us now in a Fast Money exclusive is the CEO of Trulieve, Kim Rivers. Kim, welcome back to the show. Good to see you.
Good to see you as well. Thanks so much for having me.
Can you walk us through the deal making in the U.S.? Should we think of it more as a land grab right now, because you're not necessarily achieving scale because things are so siloed state by state until it's federally legal?
Yeah, so I definitely would not characterize it as a land grab. Trulieve, if you're familiar with our company and the foundations upon which we're built, we're certainly we are focused on scale within the markets that we exist in. And while many companies in 2019 and 2020 specifically went very wide yet shallow, we chose to really focus on core markets and going deep in those core markets. And this transaction is more of that strategy being executed across regional hubs. And so what we see in terms of the future landscape of cannabis is that it is going to be very important to be strategically located across the country, but to have, again, depth and scale in those markets. To your point, we are somewhat limited in certain markets in terms of the scale that we can achieve. However, there are markets where scale is possible. So for example, in Florida, where we have approximately 50% of the market share, we have over 2 million square feet of grow, and we have 82 stores open in that market. In Pennsylvania, Harvest has a sizable footprint. In Pennsylvania is also an important market for Trulieve as well. And then when you shift to the Southwest market, Arizona, Harvest is the premier player in the Arizona market with significant cultivation and dispensaries. They actually have 18 licensed dispensaries and are the leader in that very important market that just shifted to recreational. So while I agree with you that from a national perspective, you can't achieve scale yet on a combined platform, it is important to go ahead and get scale and deep penetration and relationships with customers across specific markets in the U.S.
Hey, Kim, it's Tim. Congrats on this deal. And I know this is the kind of a deal you've been looking at for a long time. As an investor, I see that your stock historically had traded somewhat cheap to your other, call them, high cap peers in the space. I'm curious, why not use some cash on this deal for a company that's so profitable? You've generated a lot of free cash flow, and at a time when we all believe that at least much of the industry is going to continue to re-rate. I'm curious about that approach. I think the valuation of Harvest was healthy, and there's nothing wrong with that. I just think that if anything, now that you are in a few states, the re-rating of your stock is part of the story here around this transaction.
Sure. Yeah, Tim, I mean, I think that as we know, right, cash is very important in this industry, particularly around the fact that, it is difficult to achieve, market rate financial terms because of our limitations at the federal level, along with our tax rate, which we've talked about with you all. So, and look, I mean, we plan to use that cash to invest in these markets and to make sure that they are, turned on as much as possible so that we can continue to generate returns like we have in the past, right? I mean, you're talking about, with this combination, creating the most profitable cannabis company in the world. And that return on investment is very important. It's something that we're very focused on. So when you look at the price of the deal, I think it's important to note that Harvest had an incredibly strong Q1, which is just the beginning for them in terms of their continued, profitability. They had 30% EBITDA margins. They, tripled their EBITDA from Q4, significant beat on revenue. And so we've been working with them behind the scenes and doing extensive diligence for over 5 months now. So we're very, very comfortable with their position and certainly are very excited for our shareholders with respect to the future that this combined transaction brings.
Kim, always good to see you. Thanks for keeping us posted. All right. So, Tim, what did you make of the deal here? And do you think there's more deal making to come in the sector?
Well, I'm very excited. I'm a shareholder, so I'm long the stock. And I think it's very accretive ultimately to the combined entity. I think this is a case where you've seen a lot of deals in the past where 1 + 1 didn't equal 3. It actually equaled like 1.3. And this is a deal where I think it is worth more. I think the M&A in the industry is going bananas. I think consolidation, I think the top 5 or 6 players, top 10 players are looking to get bigger. I think they have more access to capital than they've ever had. And I think the industry, which has pulled back 20 to 30, 40% in the last few months, the fundamentals are never better. So, no, I think this is just the beginning.
All right.
Shepard Smith here. Thanks for watching CNBC on YouTube.